Welcome to our latest video on the topic of the impact of inflation rates on the Turkish economy. As we all know, inflation can have a major effect on a country's economy and standard of living. In this video, we will dive into the specific effects of inflation on Turkey, the measures that have been taken to control it, and the ongoing challenges that the country faces in this area. Whether you're an economic expert or just interested in understanding the topic, this video has something for everyone. So sit back, relax, and let's explore the impact of inflation on the Turkish economy together. Don't forget to hit that subscribe button and turn on notifications to stay up to date with our latest videos. Turkey has been experiencing high inflation rates in recent years, with the rate reaching double digits in 2018. The main drivers of inflation in Turkey have been a combination of factors such as increased government spending, a large current account deficit, and a weaker currency. One of the main causes of inflation in Turkey has been the government's expansionary fiscal policy. The government has been increasing spending in order to stimulate economic growth, but this has led to an increase in the money supply, which in turn has led to higher inflation. Additionally, Turkey has a large current account deficit, which means that it is importing more goods and services than it is exporting. This has led to a weaker currency, which has made imports more expensive and further contributed to inflation. The Central Bank of Turkey, CBRT, has been trying to combat inflation by raising interest rates. However, this has led to a decrease in economic growth, as higher interest rates make it more expensive for businesses to borrow money. Another factor that has contributed to inflation in Turkey is the high rate of food and energy prices. These are considered to be sticky prices, which means that they are slow to change in response to changes in the overall price level. As a result, when overall inflation is high, food and energy prices tend to also be high, further contributing to overall inflation. Despite these challenges, the CBRT has been able to bring inflation down to single digits in 2020, but it remains uncertain if it will maintain this low level in the future. Inflation rates have a significant impact on the Turkish economy. Inflation, as measured by the Consumer Price Index, CPI, has been a persistent problem in Turkey for many years. In the past decade, the country has experienced annual inflation rates of above 10%, with the highest rate reaching 25% in 2018. This high inflation rate has had a negative impact on the economy and the standard of living for Turkish citizens. One of the main effects of inflation is that it erodes the purchasing power of consumers. When prices are constantly increasing, the value of money decreases, which means that consumers have to spend more money to purchase the same goods and services. This can lead to a decrease in consumer spending and a decrease in economic growth. Additionally, inflation can lead to an increase in poverty as the cost of living becomes more expensive. Inflation can also have a negative impact on the business environment. High inflation rates make it difficult for businesses to plan and budget for the future. This can lead to uncertainty and reluctance to invest, which can further slow down economic growth. Additionally, inflation can lead to an increase in interest rates, making it more expensive for businesses to borrow money. The Turkish Central Bank has taken steps to try and control inflation, but with limited success. In 2018, the bank raised its benchmark interest rate to 24%, but this did not have a significant impact on inflation. The bank has also implemented other measures such as tightening monetary policy, but the high inflation rate remains a challenge. In conclusion, inflation rates have a significant impact on the Turkish economy. High inflation rates have a negative effect on the purchasing power of consumers, the business environment, and economic growth. The Turkish Central Bank has taken steps to try and control inflation, but the high inflation rate remains a challenge for the country. It is important for the government to address this issue in order to improve the standard of living for Turkish citizens and to promote economic growth. In conclusion, Turkey's high inflation rates have been driven by a combination of factors, including government spending, a large current account deficit, and a weaker currency. The Central Bank of Turkey has been trying to combat inflation by raising interest rates, but this has led to a decrease in economic growth. Additionally, high food and energy prices have also contributed to inflation. As an investor, it's important to keep an eye on inflation and the actions of the CBRT to make informed decisions.